Good morning. We begin with profit prior to incorporation. One of the easiest topic in your accounts, most easiest topic in your accounts. Look at the title. What is it? Profit prior to incorporation. Before that, okay, what is the procedure for incorporating a company?
Registering promoter, raising
Okay.
capital promoter.
First, you apply for the name. First, you apply for availability of name. Then once the name is allotted by ROC or the preferred name is given by ROC, then you have to source subscribers. Okay, minimum 2 subscribers, 7 subscribers in case of private and public companies. Okay, who will be ready to subscribe the memorandum and articles of association. Then get the directors. You have to specify who are going to be the directors of the company. For them, it is not just specifying is sufficient. You require a lot of KYC norms. You have to create KYC, which includes director's identification number. Which one? Director's identification number. You have to apply and get it. You have to get digital signature. Then you have to prepare which one? Memorandum of association. For preparing memorandum of association, it is not a classwork. You have to locate first your registered office. Okay. Then that address proof should be available. What you mentioned in memorandum, that registered office address proof should be available. Then all the other class like capital class, name class, object class like that, you have to draft memorandum of association which tells about why and where and what purpose the company is going to exist, who are the subscribers, okay, is it a limited liability or unlimited liability, is it a private company or a public company, all those things will be there in MOA and which one? AOA. AOA talks about rules and regulations of the organization. More about this you will learn in company law. Okay, so this is the first one you have to do. After all these things, after submission of all the documents, then ROC will grant what? ROC means Register of Company. We call it as ROC, will grant which one? Certificate of Incorporation. Which one?
Certificate of incorporation.
Okay, so first you have to do all these formalities, then register the company, then you are granted what? A certificate of incorporation. Then a private limited company can start the business immediately. For example, you started a private limited company, same like Bharadwaj Institute Private Limited, can start the business immediately. Okay, but whereas a public company, they have to go for one more certificate called a certificate of commencement of business. Which one? Certificate of commencement of business. What is the difference? Certificate of incorporation is just to tell that the company has existence or the company is born. It's like a birth certificate, Madhuri. Certificate of commencement of business, you have to submit additional documents. Again, you will learn detail in company law. What are the additional documents you have to submit? A lot of things. For example, how many shares are issued and what is the money collected? Okay, what are the, for example, expenses incurred with respect to capital expenditure like locating a factory or locating a premise or locating a business premise, where you are giving the ROC that I am ready for starting the business. I am ready for which one? Starting the business. I have done all the formalities. Financially I am ready. Legally I am ready. Yes, ready to start the business like that. You have to submit a lot of documents. Then you will be granted which one? Certificate of commencement of business. After this only which company can start? A public company can start the business. Then at the end of the year they prepare final accounts. At the end of the year they prepare which one? Final accounts as per the company's format or schedule format. Okay, now what we are learning? Profits prior to incorporation. What do you mean by profits? Income minus expenses. What do you mean by, what do you mean by prior? Before. Incorporation means registration. How a profit before registration is possible? Clear? Only after, a certificate of incorporation you start business in case of a private company. In case of a public company, after certificate of commencement only you are going to start the business. Okay, then you are going to prepare what? Final accounts at the end of the year. How it is possible to have a profit before registration of a company?
Convert from public to private.
Public to private convert panna, it's only MOA, OA will be altered.
Sole proprietor to company.
A company. Okay, sole proprietor to company.
Small business market.
Small business to company. Yes. See, profit prior to incorporation is not possible for a newly started business. A company started for a new business. You are starting a company. Thereafter, you are going to start what? A new business. For that, profit prior to incorporation is not possible. When will you start business? after certificate of incorporation or after what? Certificate of commencement of business. So profit before registration is not possible in case of which one?
Newly
A company started for a new business. But imagine, let us assume you are starting a company to take over an existing business. Let's assume A and B are partners. A and B are partners running a business. We are starting a company to take over their business. They are interested in selling their business to a company. So we are all forming a capital and form a company to take over the business of A and B. Imagine, first will you do agreement to take over the business, then start the company, or start the company, then come for signing the agreement?
Agreement first.
First agreement will be signed to take over the company. The promoters, who are the promoters? Who do all the incidental work with respect to formation of the company, they will sign the agreement. What agreement? To the partners to take over which one? The business. Then they will do all this work. And get which one? Certificate of incorporation. After that, the shares will be issued, money will be raised, and amount will be settled for them. Let's assume they signed the agreement to take over the business on, let us assume 1/4/2021. Okay. And let's assume company was incorporated on, let us assume 1/8/2021. We are preparing the first final accounts. On 31st March 2022. If you look at how many months period covered in this? 12 months covered in this. Look at up to the date of incorporation, how many months are there? April to August, April to July. How many months are there? 4 months. Okay. Please remember, agreement was signed on 1st April itself. This 4-month profit belongs to the company only. The 4 months profit also belongs to which one? Company. Can promoters take it?
No, sir.
4 months we are taking care of business before the birth of the company. So the profit, can they take it? No. As per company law, you will be learning, promoters can enter into a contract on behalf of the proposed company. But their position is, we call it as fiduciary position. What do you mean by fiduciary position? Position that is requiring a confidence and trust. Which means, if promoters are entering into any agreement on behalf of the company, any profit therefrom should be returned to the company. For example, they purchase a land for the proposed company for 10 lakhs. Suddenly you find the market value of the land has increased to 15 lakhs. Can they sell it and take the profit to themselves? No. So any profit accruing from the contract signed on behalf of the company, the promoters should not take it. That is belonging to which one? Company. So for this 4 months period, this profit is earned during which period? Pre-incorporation period. Okay. For the first 4 months, the profit is earned during which period? Pre-incorporation or post-incorporation? Pre-incorporation. Next 8 months, which profit? Post-incorporation profit. That's it. So what's a pre-incorporation profit? When a running business is acquired, profit earned from date of signing the agreement till the date of what? Incorporation, we call it as which one? Pre-incorporation profit. Whatever is a profit earned after that, we call it as which one? Post-incorporation profit. Okay, sir, what is there to learn in it? Simple. Anything that is earned before the birth of the company, pre-incorporation profit, the company law calls this as capital profit. This is as which profit? Capital profit. This will be transferred to capital reserve. Capital profit should be transferred to which one? Capital reserve. Anything that is earned after the incorporation, we call it as which one? Revenue profit. Okay, this is also called as a disposable profit. Disposable means the directors can declare dividend only out of which profit? Directors can declare only out of post-acquisition profit. Out of capital profit, can you declare dividend? You cannot declare dividend as per company law. So, as per company law, work out the capital profit and transfer to which one? Capital reserve. Work out the revenue profit. That you call it as which profit? Disposable profit or divisible profit, available for what? Dividend. Okay, sir, what is there to learn further? The problem is how to split this 4 months and 8 months. So far, what we have done is legal aspect. Okay. Now, accounting aspect, how to split the 12 months profit into first 4 months and next 8 months. Whether all the incomes are uniform throughout the year, like salary income, whether the sales will be uniform throughout the year, sales will vary. Whether all the expenses will be uniform throughout the year, like monthly a fixed amount is spent by a company. Now, there may be some expenses changes according to sales. Some expenses will remain constant like that. So in the accounting aspect, we are going to learn about how to segregate profit between what? First 4 months and what? Next 8 months. That is going to be the major part of learning in the classroom. Now let us go for organized notes. Start. Heading profit prior to incorporation. Profit prior to incorporation. Take up. When a running business is acquired, when a running business is acquired, when a running business is acquired, the profit earned between date of signing the agreement profit earned between the date of signing the agreement and date of incorporation. Date of incorporation is known as pre-incorporation profit. Is known as which profit? Pre-incorporation profit. So from the date of signing the agreement and what? Date of incorporation, whatever is earned, known as which profit? Pre-incorporation profit. Okay, this will not arise in case of which one? A company started to start a new business, where you will start business only after what? Incorporation. Next, pre-incorporation profit is a capital profit. And not available for dividend. And not available for dividend / managerial remuneration. Not available for dividend and which one? Managerial remuneration. Directors cannot be paid after incorporating a company while preparing final accounts. Directors cannot be paid the salary or remuneration out of which profit? Pre-incorporation profit. Whatever the profit earned only after the incorporation can be used for what? Paying remuneration to directors. அதான் சொல்லணுமே. Before the incorporation, they are called as promoters. Promoters oda position வந்து fiduciary position, like parents மாதிரி. Okay, they work, can they claim salary? No. Parents work for the kids, but can they claim salary for the work done for the kids? No. அந்த மாதிரி தான். Before the incorporation, the position is what? The law says fiduciary position. What is a fiduciary position? Position that is requiring confidence and which one? Trust. During that period, you cannot take any profit. You cannot claim any remuneration. Promoters don't have any right to claim what? Any remuneration. But if the shareholders want, out of the post-incorporation profit, they can remunerate for the pre-incorporation period services. Okay. So it is not available for dividend and which one? Managerial remuneration. Pre-incorporation profit is transferred to capital reserve. Okay, so when a running business is acquired, this happens. Okay, profit earned between the date of signing the agreement and date of incorporation is known as which profit? Pre-incorporation profit. It is a capital profit not available for dividend and managerial remuneration. Pre-incorporation profit is transferred to which reserve? Capital reserve. Next, post-incorporation profit. Post-incorporation profit. Profits earned from the date of incorporation till the date of which one? Final accounts. So this trouble of pre and post-incorporation profit arises every year or only during the first year of operation? Only during the first year of operation. So post-incorporation profit. Profit earned from the date of incorporation till the date of which one? Final accounts. That is called as post-incorporation profit. It is a revenue profit and available for dividend.
Sir, இப்போ ஒரு கம்பெனி mergerனா கூட post pre வரும்.
இல்ல. அங்க வந்து in case of merger, we are taking over, an existing company takes over what? Another existing company. Okay, where there is no separate incorporation that is done. So from the date of takeover, that profit will become my profit. My company is already running. If I take over another company, okay, post merger, whatever is earned, it will be incorporated.
It will be a revenue problem.
There is no capital or revenue profit because my company is already existing. It's a revenue profit available for which one? Dividend.
Another profit in
It can be used only for certain circumstances. Like at the time of liquidation, it will be transferred to what? Equity shareholders. It will be kept in capital reserve. It cannot be used for writing of losses. It cannot be used for any other purpose. Only at the time of liquidation or takeover, it can be transferred to what? Equity shareholders. Pre-incorporation profit you touch pannakoodadu as per company law rule because it happened before the starting up of the company. So don't use that profit for any purpose. Adukada full effort podu. Okay. Next. Now let us assume, for example, let us assume net profit made for a company or made by a company is 300 crores. Out of this, 4 months pre-incorporation, 8 months post-incorporation. Can you split everything in 8:2, that is 4:8 ratio? Can you split everything in time ratio? 4 months, 8 months ratio? No. Start. Adhigadi, basis of apportionment. Income / expenses. Basis of apportionment of incomes / expenses. Time ratio. What do you mean by time ratio? Pre-incorporation period, that time. Post-incorporation period, that time. 4 months, 8 months, 3 months, 9 months, 6 months, 6 months in the morning. Based on which one? Time ratio. All fixed incomes, all fixed expenses, okay, all fixed expenses and regular incomes. All fixed expenses and which one? Regular incomes. Based on time period, what are the expenses that are incurred? Salary, rent, administration expenses, electricity, depreciation on assets, costing. You may think that depreciation, more usage, more depreciation in the mari, but come to accounting side. Do you claim depreciation based on volume of usage of the asset or time period for which the asset is used?
Time period.
Time period. So depreciation is a kind of fixed expense in accounting. The asset is used for 1 year, we claim 10%, 20%. How many hours used, how many days used, we don't count. Okay, if the asset was put into use, we claim depreciation. So it's a kind of a fixed expenses. So all types of fixed expenses, which may be printing and stationery.
Sir, you know the variable expenses.
Printing and stationery.
Depends on the
Not printing paper or whatever. Printing and stationery consumed in office. Okay, that will be a fixed expense. Office pens, stationeries, all these, scribbling pads are all things that you use in a administrative office. That is more like a fixed expense only. Okay, it is not like, for example, you are printing books and selling them. Then in that case, it will become which one? Variable expense. General printing and stationery expenses. All those things. General interest on loans. All types of fixed expenses. Maybe in costing you would have learned in classification of expenses that fixed expenses.
insurance.
Insurance also. Insurance is not taken monthly, it is taken on an yearly basis. It's a fixed expense. Then interest received, dividend incomes and rental incomes. So anything that is or which are regular or fixed in nature will be apportioned based on which one? Time ratio. Audit fees also. Audit fees is paid for auditing pre-incorporation profit or post-incorporation profit or both? Both. So all these things are apportioned on what basis? Time ratio. Next, number 2. sales ratio, all variable expenses, and gross profit. Gross profit, of course, depends on sales. Example, advertisement expenses, discount allowed, bad debts, collection charges, showroom expenses.
Discount receipt.
Discount receipt is for purchases. That's not based on sales. So showroom expenses,
Trade expenses.
depreciation on delivery vans, salesman commission,
Trade commissions, sir. Trade expenses.
trade expenses will be a fixed expense. Trade expenses, in accounting we use some word trade expenses to denote all the upkeep maintenance expenses of the assets. All variable expenses and gross profit, advertisement, discount allowed, bad debts, collection charges, showroom expenses, depreciation on delivery van, salesman commission, all sales promotion expenses. Carriage outwards, delivery charges. Delivery charges for the goods which are sold out. We use which ratio? Sales ratio. Right? Go for fixed expenses. Use time ratio for all which one? Fixed expenses. Use sales ratio for all your
Variable expense.
variable expenses. Next. Certain expenses come based on purchases, or certain incomes and expenses comes on purchases. Example, carriage inwards, storage expenses, or not storage expenses, carriage inwards. No, wages is not based on purchases. Wages, generally we go with the time ratio. Wages, generally we go with what? Time ratio. Unless it is specified that wages are paid according to piece rate, we go with which one? Time ratio. Salaries and wages, we are going to apportion based on what? Time ratio. For carriage inwards, discount received. Certain expenses will come only during the post-incorporation profit.
Legal expense.
No, only during the post-incorporation period. Legal expenses might arise during pre or post. Can come in any period. Legal expenses, general legal expenses can come during any period. That will be apportioned on time ratio. Certain expenses will arise only during the post-incorporation period. Yeah, director's fees. Dividend is not taken as an expense, it's an appropriation of profit. Okay. Director's fees and remuneration, it will come only during which period? Post-incorporation period. Debenture interest. Who can issue debentures? A partnership firm or a company? A company. So, debenture interest is a post-incorporation expense. Exclusively for which one? Post-incorporation expense. Preliminary expenses. Written off. Okay, it is spent before incorporation, but it will be written off after the company is incorporated or amortized after the company is incorporated. Discount on issue of shares or underwriting commission. Written off. These expenses arise only during the post-incorporation period.
Provisions allowed fixed income.
What type of provision? If it is provision for bad debt, it will be on sales ratio. If it is provision for depreciation, it is based on what? Time ratio. For what you create provision. So these expenses come only during which period? Post incorporation period. So charge them only for the 8 months, 9 months period. Next, number 5, pre-incorporation period only. Certain expenses arise only during the pre-incorporation period. Go back to the example that I have given or seen. Listen, a company is going to be formed to take over a partnership firm. So what we say is, till the company is formed, the partners will take care of the business. Partners will take care of the business. After the company is formed, they will also become directors. Before incorporation, who's taking care of the business? Partners. So the promoters may agree to pay the partners to take care of the business some salary, not profit, share of profit. Which one? Salary to take care of the business. That will come. So pre-incorporation only. Partner's salary. Partner's salary. Interest on capital before incorporation. Preliminary expenses what do you mean by preliminary expenses? MOA charges, AOA charges, DAN charges, registration charges, incorporation charges. They are spent for what? Company. So on the expense write off when will you write off? After the incorporation.
So the registration expense is capital expenditure.
Capital expenditure, it will be amortized. Like building cost, plant and machinery cost, you will amortize. What do you mean by amortize? Write off in P&L account.
Amortize by increasing the value.
No, writing off the value. Amortize means what? Depreciation money. Depreciation is the word used for tangible assets. Amortization is used for what? On intangible fictitious assets. Okay. So partner salary, interest on capital before incorporation. Sometimes even promoters might get salary. Promoter's salary, anything payable. Commission to partners. Okay. Interest on loans during pre-incorporation period. For example, there would have been some loan from a bank which would have been paid after incorporation. The loan would have existed only during the pre-incorporation. Suppose if there is any specific loan only during the pre-incorporation period, that will be charged only for what? The first 3 months or 4 months like that.
Partners loan.
Interest on partners loan. That includes this interest on loan during the pre-incorporation period. All types of loans. Promoters might get some salary to take care of the business. For example, if you appoint somebody else, you have to pay salary. Okay, 5 or 6 promoters are there. One of the promoter may be asked to take care of the business till the company is incorporated. For that, the salary can be paid. Only profit cannot be taken, but in the form of salary, they can take it. Fair market value, they can take what? Salary. There are so many sources. There are so many sources in which capital reserve can be created. Okay. Once again, I repeat from the beginning. What is a pre-incorporation profit?
Profits.
Whatever is a profit earned before the incorporation of a company. That is from the date of taking over till the incorporation. We call it as which profit? Pre-incorporation profit. What is a post-incorporation profit? Whatever is earned after the incorporation of company. All fixed expenses will be apportioned based on what? Time. All the expenses which are varying based on sales, it will be apportioned on what? Sales ratio. Certain expenses change according to purchases, use purchase ratio. Certain expenses arise only during the post-incorporation period, charge them only for post-incorporation period. Certain expenses only during which period? Pre-incorporation period, charge them only during which period? Pre-incorporation period, and work out the profit or loss. Next. Now, the solution of the problem depends on the ratios, time ratio and the sales ratio calculation. They can ask questions based on that. Okay, only based on calculation of which ratio? Time ratio and which one? Sales ratio. So what is there in it in anything? We'll see. Start. It's not there in the material. Let us work out specific problems. Take basics. This alone is tested sometimes for 3 marks, 4 marks as a gap filler in the exam. Start. A Limited was incorporated to take over a running business from 1/4/2021 on on 1/8/2021 to take over a running business from 1/4/2021. Okay, let us work out case by case. Time ratio is going to be common for all. Time ratio is simple to work out. Time ratio is simple to work out. What is the date of signing the agreement?
1/8.
Tell me the date of signing the agreement.
1/8/2020.
1/8/2021, A Limited was incorporated. A Limited was incorporated on this date to take over running business from what date? 1/4/2021, which means we have already signed the agreement on what date? 1/4/2021, and we are incorporating the company on 1/8/2021. Date of incorporation. Date of incorporation. What is the date of incorporation? 1/8/2021. When the final accounts is prepared? 31st March 2022. So how many months covered in this? Pre-incorporation, எவ்வளவு months? 4 months. Post-incorporation, எவ்வளவு months? 8 months. So time ratio is 1:2. Time ratio is what? 1:2. Any doubt in it? The promoter signed the agreement with effect from which one? With effect from 1/4/2021 to take over the running business. So date of incorporation, இது வந்து என்ன profit? Pre-incorporation, first 4 months. Post-incorporation, next 8 months. What is the time ratio? 1:2. There doubt இருக்கா? இங்க company asks you to work out only pre and post incorporation, pre and post incorporation only, not pre and post certificate of commencement of business. What should be ignored? This should be ignored. Certificate of commencement of business doesn't matter for us. Before incorporation and which one? After incorporation only matters. Ignore the date of which one? Commencement of business or certificate of commencement of business. Already business is running. Certificate of commencement of business is a legal formality. It is like there's a difference between date of birth versus getting a birth certificate. This is a birth certificate for your business, please ignore. Now case 1 paranga, sales during the post incorporation period was double than that of which one? Pre incorporation period, okay? Post incorporation period was double on a monthly average basis. So let us work out. Time ratio is common for all the cases. What is the time ratio? First 4 months. First 4 months, April, May, June, July. 4 months pre, 8 months post. The question is, what is the sales ratio? For the case 1. Pre-incorporation and post-incorporation. Eவ்வளவு months?
4 and 8.
Okay, that we already worked out. Time ratio already worked out. Sales ratio work out பண்ணுங்க பார்க்கலாம். Think பண்ணுங்க. What is the words used? Sales during the post-incorporation period was doubled on a monthly average basis னு கொடுத்திருக்கோம். அப்ப என்ன இருக்கும்? Sales ratio 4:16. 1:2.
1:4.
1:4. 4:16 can be written as 1:4. Look at the words used. It is not just doubled னு கொடுக்கல. Doubled on a monthly average basis. So pre-incorporation, if it is 4 months, like 4 into X மாதிரி. Post-incorporation எவ்வளவு months? 8 months. How many months? 8 months into 2X. 8 months into 2X. Doubled on a monthly average basis. If you are selling for X to P, if you are selling for X to P during the pre-incorporation period, post-incorporation we are selling for what? 2X. So 4X varu, it will be 16X. So what is the ratio?
1:4. So monthly basis ன்றதால 300 by 12 னு எடுத்துக்கிட்டாங்க. 25 into 4 and
வேணாம் அவ்வளவு கஷ்டம். சும்மா
25 into 4 பண்ணிட்டு மீதி 25 into 8
25 into 50 into 8.
So 1:4 ratio. எந்த மெத்தட்ல வேணா போட்டுங்க. 1:4 போட்டா ஓகே. Done? Any doubt in it? So 4X 8 into 2X இந்த மாதிரி. Now let me review for the case 2. Sales up to certificate of commencement was even. Thereafter, it increased by 2/3 during the rest of the year. Case 2. Time ratio is same. Time zone another. 1st April to 1st August. எவ்வளவு months? 4 months pre-incorporation. அதுதான் 1st August to 31st March. எவ்வளவு months? 8 months post-incorporation. அதேதான். Time ratio same. Time ratio is simple. There's no need to work out multiple problem. Only in sales ratio they can add some complications. Now what is the sales ratio? Any doubt in the first case? 4 into X, 8 into 2X on a monthly average basis use பண்ணதுனால. Case 2 க்கு try பண்ணுங்க.
So 50 is to 167. So 175 is to 208. 175 is to 208.
இல்ல. Listen, let me to work out. Let me to keep the average sales or pre-incorporation sales or before certificate of commencement of business. Before certificate of commencement of business, எவ்வளவு months இருக்கு? 6 months இருக்கும். Before certificate of commencement of business. அதாவது 1st April இருந்து 1/4 to 1/10. 1/10 எவ்வளவு months இருக்கு? 6 months இருக்கு. அந்த 6 monthsல சேல்ஸ் பாத்தீங்கன்னா ஏப்ரல் டு 1st October. செப்டம்பர் ரெண்டு வரைக்கும் எடுத்துக்கணும். ஏப்ரல் டு செப்டம்பர் எவ்வளவு months?
6 months.
6 months. Okay. 6 monthsக்கு உங்களோட சேல்ஸ் பாத்தீங்கன்னா every month X இருக்கும். X each. x each அந்த மாதிரி இருக்கும். Then after incorporation, that is 110 to 31st March. 110 to 31st March எவ்வளவு months? 6 months. அதுல பாத்தீங்கன்னா 6 into x, 6 into x போட்ட என்ன இருக்கும்? 6x normal. Add what? 2 by 3. 2 by 3 increase ஆயிருக்கு இல்லையா? அப்போ 2 by 3 of 6. 2 by 3 of 6 என்ன வரும்? 4x வரும். So total எவ்வளவு வருது? 10x. Once again, pre-incorporation every month 6 months க்கு 6 into x அந்த மாதிரி 6 into x each month, which means 6x அந்த மாதிரி இருக்கும். Pre-incorporation periodல 6 into x 6x இருக்குமா? Post-incorporation periodல 6x plus increased by what? Increased by 2/3. 2/3 என்ன வரும்? 4 வரும். Total என்ன வரும்? 6. Wait பண்ணுங்க. இப்போ last 6 months ஓட sales எவ்வளவு இருக்கு? Last 6 months ஓட sales எவ்வளவு இருக்கு?
2/3 increase.
10x இல்லையா? Last 6 months ஓட sales எவ்வளவு? 10x. பட் நம்ம pre-incorporation period எவ்வளவு months கவர் ஆகுது? 4 months. Pre-incorporation period covers only how many months? 4 months. அப்போ 4 into x ஆயிடுமா? 4 into x. 4 into x ஆகும் 4x. Then last 6 months 10x இருக்கு. இன்னொரு 2 months gap இருக்கு இல்லையா? Another 2 months gap. Okay, maybe if I work out on a monthly basis, it's better. என்ன month? April, May, June, July. April, May, June, July என்ன பீரியட்ல வருது? Pre-incorporation period ல வருது இல்லையா? So how much it will be? 4 into x. 4 into x என்ன வரும்? 4x for this period. Okay. August and September என்ன இருக்கும்?
2x.
2 into x. 2 into x, 2x இருக்கும். Then October
2
to
into 4x.
October to March. இப்பதான் ஒரு கூட்டணும் எவ்வளவு இருக்கு? 10x. So pre-incorporation period எவ்வளவு வருது? Pre-incorporation period எவ்வளவு வருது? 4x. Pre-incorporation period April to July period. This period எவ்வளவு வருது பாருங்க.
Sir, புரியல sir.
இதுவும் புரியல. இன்னொரு மெத்தட் இருக்கு. Pre-incorporation period total எவ்வளவு இருக்கு? 4x. Post-incorporation period எவ்வளவு இருக்கு? 12x. So what is the ratio? 1:3. 1:3. Once again I repeat. Before certificate of incorporation, how many months are there?
6 months.
6 months. April to July falls in which period? Pre-incorporation. 4 months. X. அப்ப எவ்வளவு வரும்? 4x. August and September also sales is what? X அந்த மாதிரி 2x ஆயிடும். Okay. October to March, they tell that sales increases by what? 2/3. So 6 into x, 6x plus 2/3 of that will be what? 4x total ஆகும் 10x ஆகும். So 10x, this August and September also falls in which period? Post incorporation period. Total ஆகும் 12x ஆகும். So pre incorporation period how many months? 4 months. இல்ல சார் இது புரியலன்னா ரொம்ப சிம்பிள். மந்த் வைஸ் எடுத்துங்க. ஏப்ரல், மே, ஜூன், ஜூலை, ஆகஸ்ட், செப்டம்பர், அக்டோபர், நவம்பர், டிசம்பர், ஜனவரி, பிப்ரவரி, மார்ச். எடுத்துட்டு ஏப்ரலோடது என்னது? எக்ஸ். மேயோடது என்னது? எக்ஸ். ஜூனோடது எவ்வளவு? எக்ஸ். ஜூலையோடது எவ்வளவு? எக்ஸ். ஆகஸ்டோடது எக்ஸ். செப்டம்பரோடது எக்ஸ். 2/3 இன்க்ரீஸ் ஆனா 1.33x வரும். 1.33x அப்படி வரும். For the rest of the month. இப்போ ஆட் பண்ணி பாத்தீங்கன்னா ஏப்ரல், மே, ஜூன், ஜூலை இந்த 4 months பீரியடுக்கு எவ்வளவு வரும்?
4x.
April, May, June, July. For this period, you will get what? 4x. இதோட பீரியடுக்கு 4x வந்துடும். This is for pre-incorporation period. This is for which period? Pre-incorporation period. இதோட மொத்தமா ஆட் பண்ணி பாத்தீங்கன்னா 12x.
Sir, but sales up to certification of commencement was
Evenனா uniform.
Sir, ஆனா நம்ம ரேஷியோ ஸ்ப்ளிட் பண்ணும்போது before commencement and after commencement. ஆனா
ரேஷியோ ஸ்ப்ளிட் பண்ணும்போது we are doing only pre-incorporation, post-incorporation. Computational purpose only, based on the data we take it. இந்த computational purpose-காக என்ன கொடுத்திருக்காங்க? up to certificate of commencement of business எடுத்திருக்காங்க. பட் நம்ம ரேஷியோ எடுக்கும்போது we take only for what? First 4 months and what? Next 8 months தான். First 4 months ஓட சேல்ஸ் எவ்வளோ?
4x.
4x. August and September also x plus x 2x தான். அதுக்கப்புறம் தான் என்ன ஆகுது? Increases by 2/3. So totally 12x.
So நான் இத பண்ணும்போது pre and post I should take dividend கொஞ்சம்.
எப்படி வேணாலும் பண்ணலாம்.
எப்படி வேணா போடலாம், நோ ப்ராப்ளம். ஒரு நிமிஷம். இல்ல இதுவும் புரியலன்னா இன்னொரு மெத்தட் இருக்கு. ஓகே, மந்த் ஆன் மந்த் போட்டுக்கணும். ஏப்ரல், மே, ஜூன், ஜூலை, ஆகஸ்ட், செப்டம்பர், ஜனவரி, பிப்ரவரி, மார்ச்சா,
Yes sir.
ரெண்டு மந்த் போட்டிருக்கேன்ல.
Yes sir.
So இந்த ஏப்ரல் மந்த்க்கு if it is 1 rupee 1 rupee 1 rupee 1 rupee 1 rupee till செப்டம்பர்னா அக்டோபர்ல என்ன ஆகும்? 1.333 2/3 இன்க்ரீஸ் பண்ணா 0.33 0.33 or 0.67 0.67 1.67 வரும் 1.6667 அப்படி வரும். இதெல்லாம் போடுங்க. So இப்போ which month is free? April to July will fall in what? Pre-incorporation period.
4 rupees.
So அதை add பண்ணுங்க. அதே மாதிரி ஆகஸ்ட் டு which month? March month it will come in what? Post incorporation. August to March month it will come in post incorporation.
All right.
So add பண்ணி பாருங்க, it will be what? 4x. This will be 12x வரும். Or 4 into 12. 4 rupee 12 rupee வரும். Please remember, August and September also your sales is what? 1 rupee. That falls in which period? Post incorporation period. October, November, இதெல்லாம் மார்ச் எல்லாமே கிடையாது. So ratios 4:12. So we can say 1:1:3.
Sales figure ல 1:3.
Sales figure doesn't matter for us. அதை வச்சும் போடலாம். பட் எனக்கு அது தெரியாது.
12 months டிவைட் பண்ணிக்கலாம் சார்.
300 by 12 25 வரும்.
25 வரும். அதை into 4 பண்ணிக்கலாம். 100 வரும். இப்ப அடுத்த 2 மாசத்துக்கும் சேல்ஸ் ஈவன் தான். So 25 into 2 50 வந்துரும். So 25 to 6 150. அதான இன்க்ரீஸ் ஆகும் 2/3.
இப்படி போட்டா டோட்டல் சேல்ஸ் 300 வராது.
400.
இல்ல 150
ரேஷியோ ஸ்ப்ளிட்டிங் ஈஸியா
150 into 2/3 100.
லாஸ்ட் I'll repeat. இதான் ரொம்ப ஈஸியஸ்ட் மெத்தட், எல்கேஜி மெத்தட் மாதிரி. ஏப்ரல், மே, ஜூன், ஜூலை சேல்ஸ் இஸ் வாட்? 1 rupee each. ஆகஸ்ட் அண்ட் செப்டம்பர் ஆல்சோ 1 rupee each. Thereafter increases by what? 2/3. 1 rupee ஓட 2/3 எவ்வளோ? 0.67. So 1.66667 வரும். That is from October to March. So August to March add பண்ணீங்கன்னா you will get what? 12x. April to July pre-incorporation how many months? 4 months. So 1:3 ratio.
எக்ஸாம்பிள் 1 சொன்னா பாத்தீங்க சார் எக்ஸ் சொன்னா பிரச்சனை.
Overall. Case 3. Case 3. Sales during the second quarter was 150% of the first. Sales during third quarter was 200% of the second, and last quarter 2/3 of the second quarter, third quarter. Sales during the second quarter was 150% of the first quarter. Sales during the third quarter was 200% of the second quarter. Sales during the last quarter was 2/3 of the third quarter.
சோ ஒரு குவார்ட்டர்னா 3 இயர்ஸ்.
தெரியாது.
இல்ல ஆமா
3 months.
போயிட்டு 3 ஆஃப் 4.
since it is given in percentage, ரொம்ப திங்க் பண்ண வேணாம். ஃபர்ஸ்ட் குவார்டர் 100 வச்சுங்க. நெக்ஸ்ட் குவார்டர் என்னது 150%. 150, 150, 150. Next 200% of the second quarter என்ன வரும் 300, 300, 300. Next 2/3 of the second quarter என்ன வரும் 200, 200, 200. Here 100, 100, 100. அதோட 150%, 150, 150, 150. அதோட டபுள் 300, 300, 300. அதோட 2/3 200, 200, 200. This is for information. But for us, first 4 months ஓட sales பாருங்க எவ்வளவு இருக்கு 450x அப்படி வச்சுக்கலாம் 450. Okay. After that படி பாருங்க. Next
180,
1800. So ratio is 450 is to 1800. What will be the ratio?
1:4.
1:4. Monthly, April, May, June, 3 months constitute a quarter. Okay, 100, 100, another மாதிரி எடுத்துங்க. July, August, September, 150%. October, November, December, 200% of the second quarter. 2/3 of the third quarter. So 1:4 is the ratio. Solving the problem will take only 2 or 3 minutes of time, but this working out of the sales ratio only matters.
இந்த சாப்டர்ல இருந்து ரெகுலரா கொஸ்டின் வருது.
கேக்குறா 7 marks 8 marks அந்த மாதிரி 6 marks average basis 6 marks weightage.
நமக்கு அக்கௌண்ட்ஸ் 120 மார்க்ஸ் தான் நான் 100 எடுத்துக்கணும் ஆப்ஷனலா இருக்கும் அப்படிதான்.
Okay, next case 4. Case 4. Sales data. Sales data. April, August and January, 50% of average sales. June, September and December, 125% of average sales. July, and February. July and which month? February, 75% of average sales.
So May,
அவ்வளவுதான் டேட்.
4 மாசம்னா 190
தெரியாது, அவ்வளவுதான் டேட்டா. Calculate sales ratio. First one let me to change 75% எடுத்துங்க.
What is it?
எல்லாரும் கன்ஃபியூஸ் பண்ணு. 50%. Data is available only for how many months? April, August, January, 6, 3 plus 3 plus 6. 8 months on data. Remaining 4 months data is not available. So they ask you to calculate which ratio? Sales ratio.
So 11:30.
What is average sales? 300 crore divided by 12 months. 300 crore is the sales for the year divided by 12 months. 300 crore by 12 months put in over 25 crores. April, August, January, 50% of average sales. 50%. April, August, and which month? January, 50% of average sales. So which means how much it will be? 12.5 crores. Then June, September and December, 125% of average sales. 125% and over 25 into 125%.
37 point.
30?
1.25.
June, September. Then December.
June is 1.25.
July month, எவ்வளோ percentage கொடுத்திருக்கோம்? 75% of average sales. 75%? Hello, 28 point?
18.7.
18.75. Then 8 and February month. 18.75. Balance month என்ன பண்ணுவீங்க?
25.
25. Wait. Total, don't assume average sales. Don't assume average sales. What is the total sales for the year? Always see institute things in the other way. For the year, what is the total sales for the year? 300 crores. Information available on the 8 months period கான sales add பண்ணுங்க. Information available period this 12.5, 31.25, 18.75, 12.5, 31.25, 31.25 and what? 12.5 plus 18.75. Add பண்ணா information available for how many months? 8 months. எவ்வளவு வருது? 168.75. இன்னும் balance எவ்வளவு இருக்கு? Balance 300 minus 168.75 போட்டு என்ன வருது? 131.25. Suppose if you assume average sales என்ன பண்ணிருப்போம்? 4 into information is not available for how many months? 4 months. Suppose if you assume average sales என்ன பண்ணிருப்பீங்க? 4 into எவ்வளவு crores எடுத்திருப்போம்? 25 crore எவ்வளவு எடுத்திருப்போம்? It will be 100 crore only. 4 into 25 crores போட்டா only 100 crores தான் வந்திருக்கும். But what is the balance sales left? 131.25. So balance sales will be equally apportioned for the information not available months. Balance sales for the remaining 4 months. So 131.25 crores divided by எவ்வளவு months? 4 months. எவ்வளவு வருது?
32.8125.
This divided by 4. 31.32.8125 வரும். 31.8125 வரும். 32.8125. 32.8125. So for the remaining months you take this. For the information not available months 32.812. That is not average sales. Average sales போட்டா 25 தான் எடுத்துப்போம் இல்லையா?
சார் இதுல இருந்து ரேஷியோ இது பண்ணுவா அப்படியே இதோட ஃபைனல் வச்சு
ரேஷியோ ratio. How many months pre-incorporation? 4 months pre-incorporation. Next 8 months post-incorporation. So pre-incorporation or total?
62.5.
First 4 months.
61 is to 141.
Post-incorporation.
95.31%.
அப்படியே வச்சுங்க ரேஷியோ விட்டுடுங்க இதுக்கு மேல போடும் 95.3125 is to 204.6975 வேணா ரெடியூஸ் பண்ணிக்கலாம்
So, into 16 பண்ணி whole number எடுத்துக்கோங்க.
Do you understand? Average sales is 25 crore. For the information provided months, we fill the data. For information available for 8 months, so the total sales எவ்வளவு இருக்கு 168.75. Okay. Balance sales for the remaining 4 months is 131.25. So that divided by 4 போட்டா 32.8125 வரும். So don't assume average sales.
So can you stop? ஏன்னா ஆவரேஜ் சேல்ஸ் எடுத்தா 300 டோட்டல் வராதுங்க.
Because total sales for the year we know 300 crores. So remaining months average assume பண்ணீங்கன்னா the total will not be 300 crores. Some sales will be left out. So that's why where the information is not available for the remaining months, remaining sales is allocated equally.
ஆக்சுவலா
Here we take actual figures because average sales, the word which sales is used, average sales is used. Average sales means for the period divided by 12 months. So this is the ratio, pre-incorporation versus post-incorporation ratio. Data may, from this you should understand, data may be given in any order. First 6 months, next 6 months, first 8 months, last 4 months, like that. The data may be given in any order, but we have to ensure that at the end we work out the ratio for the pre-incorporation and what? Post-incorporation period. 61 is to 131 is the final answer.
ஆனா அது கம்பல்சரி அப்படி போடணும்.
Simplified formula.
Simplified form. Ratio always should be expressed in the most simplified form. So remember we were doing only which ratio? Multiple methods are different way in which they can ask what sales ratio. இதுக்கு accounting சம்பந்தமே இல்ல. Only a logical understanding of the question that we do. Are we doing debit and credit preparation of accounts? Only just a logical understanding of apportionment. Next. What is the time ratio in this question?
1:2.
4 months is to 8 months. 1 is to 2. Yeah. Shall we? Have we taken up? Shall we proceed? Take up this next. This is not a separate case. Take up this. there were, take it up, there were 8 workers, there were 8 workers during pre-incorporation period. There were 8 workers during which period? Pre-incorporation period. Okay, 80 workers. Next. 100 more were recruited after incorporation. There were how many workers? 80 workers during which period? Pre-incorporation period. How many more workers were recruited? 100 more workers were recruited after incorporation. Calculate ratio for apportioning salary. Okay. Pre-incorporation, post-incorporation, how many months? 4 months and what? 8 months. Generally, the salary will be allocated based on time ratio. Generally, salary will be allocated based on which ratio? Time ratio. But here, workers changed. Workers, எவ்வளோ workers இருக்காங்க? Pre-incorporation, how many workers? 80 workers. Post-incorporation, 180 workers. 100 more were recruited in கொடுத்திருக்கோம். So, we give weightage for both. 4 months into how many workers? 8 workers, 80 workers. 4 months into எவ்வளோ workers? 80 workers.
320.
Then 8 months into yellow workers, 180 workers. So 320 is to 1440. This is called as weighted time ratio. Weighted time ratio. We give weightage for number of workers also. When number of workers change, we give weightage for what? Number of workers and what? Time period for which they worked. So 320 is to 144. 1440 in ratio work.
2:9, sir.
2:9 ratio. Generally, the salary is apportioned based on what? The time period. Since workers' data is available, we multiply with what? Number of workers, so that we get weightage for both time as well as what? Number of workers. Take up this next question. The business was taken over for a consideration of how much? 500 crores. Purchase consideration was settled on 1/1/2022 with an interest of 18 crores. In which ratio this interest will be apportioned? When the agreement was signed to take over the business?
1/4/20. 20. Okay.
When the company was incorporated?
1/8/21.
Okay. When the interest was settled?
1/1 Jan paid.
Interest was paid up to 1/1/2022. We are not paying interest till the end of the year. We are paying only up to what? 1/1/2022.
Sir, up to or on?
Up to. With an interest. We are settling the purchase consideration on 1/1/2022 means up to the date you have to pay interest. See, we agree to take over your business on what date? April. April consideration settle பண்ணிருக்கணும். But we are settling the consideration on what? 1st January only. For the intervening period, we are settling with an interest. 500 crores plus interest extra pay பண்றோம். So how many months pre-incorporation? 4 months covered in pre-incorporation. In this, how many months covered in post-incorporation?
6 months.
1/8 to 1/1 only. Eவ்வளவு months? 6 months. 6 months in which period? Post incorporation period like covered. Okay. So what is the ratio? What is the ratio? 4:6 can be written as 2:3 ratio. Okay, the interest will be segregated not in 4:8 ratio. Time ratio la poda matom because we are not paying interest till the end of the year. Whether the 18 crores of interest is paid up to 31st March. We are paying interest only up to what date? 1st January. Pre-incorporation anyway, how many months covered? 4 months covered. Post-incorporation period le interest was not paid for full 8 months. It was paid only up to how many months? 6 months. 1st January le settle pandro. 6 months. 1st January le settle பண்ணிருக்கோம். 6 months வருமா? 5 months.
5 months.
5 months.
4:5.
So 4:5. Okay. Pre-incorporation 4 months. Post-incorporation only how many months covered? 5 months covered.
agreement incomplete date வந்து நம்ம அசைன் பண்ணிருக்கோம்.
இல்லையே ப்ராப்ளத்திலே கொடுத்துருக்கானே சேம் ப்ராப்ளம் தான் எடுத்து எல்லாமே பண்ணிட்டு இருக்கோம். A Limited was incorporated on 1/8/2021 to take over running business from 1/4/2021. Same problem வச்சு தான் எல்லாமே போட்டு. So agreement to take over to incorporation date 4 months and interest payment date is 1/1/2022. So 5 months covered in post incorporation period. So ratio is 4:5.
இந்த ரேஷியோ தான் வச்சு ப்ராஃபிட் டு இன்கார்பரேஷன் கால்குலேட் பண்றது.
பண்ணும் அதான் நெக்ஸ்ட் போட போறோம். Now students won't go wrong in apportioning, but in calculating the ratio, sales ratio, time ratio, number ratios, like if you make a mistake, then the final amount will be wrong. So where you go wrong, that is the area we focused on. We completed. Now solving a problem will take very less time. Will take very less time.
Confusing வந்து the 80
See, in textbook, this is technically called as adjusted time ratio. Adjusted time ratio. என்ன time adjust பண்றோம் இல்லையா? அதனால adjusted time ratio. Okay, adjusted time ratio. இதுக்கு வந்து என்ன சொல்லுவோம்னா weighted time ratio. And we are giving what? Weightage for number of workers and what? Time. Weighted time ratio. இங்க time is not taken for the whole period till 31st March. Time is adjusted to 1st January. So 4 months plus 5 months. 9 months தான் work out பண்றோம். That's why it is called as adjusted time ratio.
இந்த இன்ட்ரெஸ்ட் அமௌண்ட் தான் 4/9 நம்ம எடுத்து ப்ராஃபிட் பிஃபோர் இன்கார்பரேஷன் பண்ணோம். 500 crores வந்து பாத்தீங்கன்னா
அது வந்து purchase consideration. That is not a revenue expenditure. That is a capital expenditure. It is like price paid to purchase the business.
அதான் சார்
That is a capital.
அது எங்க பார்ப்போம்?
அது capital. Balance sheet ல வரும். Not a P&L account item. For example, I purchase your business by paying 500 crores now. Assets minus liabilities. Net worth, how much I am paying you? 500 crores. Is it a revenue expenditure or capital expenditure? Capital expenditure. That will come in balance sheet. That's our capital. For that, assets and liabilities are taken over. That will not be reflected in your P&L account at all. It will not affect pre or post incorporation profit.
But in the 18 crores மட்டும் affect sir.
18 crores will be split in which ratio? 4:5 ratio. 4:5 ratio. Now learning part is over. Now let us come to the examination or question part. This we learnt already. Gross profit and ratio, sales ratio, salary na, time ratio, rent rates, time ratio, depreciation, time ratio. The audit fees to vendor கிடையாது, typing error. Audit fees and ratio, time ratio, carried outward sales ratio, commission, advertisement, etc. Sales ratio. Directors fees, preliminary expenses, discount on issue of shares will be allocated for what? Post incorporation period. Interest, general interest will be apportioned on what ratio? Time ratio.
So the direct ratio
Direct na post incorporation. Direct means it will be directly charged to what? The post incorporation period.
no ratio.
No ratio. We'll see. Go to question number 1.
break நம்ம எடுத்துக்கலாமா?
Okay, break. Yes. Go to the first question. Rajinikanth Limited was incorporated on what date? 1st March 2016. This is date of incorporation. Certificate of commencement of business doesn't matter. A company bought a business from which date? 1st November 2015. We are preparing the accounts on 31st March 2016. So accounting period is from November to October. Not January to December, not April to March. Accounting period is which period? 1st November starts on, ends on what? 31st October 2016. When the company was incorporated, 1st March 2016 கொடுத்திருக்கோம். Then sales for the year was 6 lakhs. Out of that, up to 1st March was how much? 2,50,000. Then up to 1st April தான் கொடுத்திருக்கோம். That doesn't matter for us. Start. Question number 1. What is date of signing the agreement?
1st March 2016.
No, signing the agreement. First incorporation. First March 2016. Final accounts date.
October 31st.
Pre-incorporation, எவ்வளவு months? November, December, January, February. 4 months. Post-incorporation.
Please call those.
Post-incorporation, how many months? Of course, 8 months. This is a time zone. Sales பாருங்க என்ன கொடுத்திருக்கோம்? Sales, total sales for the year எவ்வளவு கொடுத்திருக்கோம்?
6 lakhs.
6 lakhs. 6 lakhs is the total sales. Out of this, up to 1st March, what is the sales given?
2,50,000.
That other information irrelevant for us. Balance. Time ratios 1:2. Sales ratio
5:7.
We can prepare the, P&L account in columnar format or in statement format we can do. We can do it in a statement format itself.
Statement of format.
Income minus expenses, that method. Over?
Yes, sir.
Up to this over, shall we? Start. Statement showing, please do it along with me. Statement showing pre and post incorporation profit. Statement showing pre and post incorporation profit. Maintain columns like particulars. Have a lengthy column, then basis, total, then pre-incorporation, post-incorporation. Where will you start with? Gross profit. Gross profit for the year எவ்வளவு கொடுத்திருக்கோம்?
1,80,000.
என்ன ratio?
Sales ratio.
Sales ratio. Or you can put 5:7 also. Or some textbooks they put sales 5:7 in the month. What is the total given? 1,80,000. So 1,80,000 into 5 by
12.
12, 7 by 12. Any other incomes given? No other income. Less expenses. Expense lib. What is the first one? Rent. Rent basis time ratio. What is the time ratio? 1:2. What is the next one? Salaries. Time ratio 1:2. What is the next one? Director's fees. Director's fees, it will be allocated to post incorporation period because directors are appointed after the incorporation. Then interest on debentures post incorporation period. What is the next one?
Audit fees.
Audit fees apportioned on what basis?
Time ratio.
Time basis. Then discount on sales, based on sales ratio. What is the sales ratio? 5:7. Then depreciation time ratio. Next,
Advertising sales ratio.
sales ratio. Then printing and stationery time ratio. General expenses
Time ratio.
time ratio. Then
Commission on sales.
commission on sales sales ratio. Then
Bad debts 500 related to debt created prior to incorporation.
bad debt it is given. What is the total bad debts given in the problem?
1,500.
1,500. அதில் clear-ஆ கொடுத்திருக்கோம். 500 related to bad debts related to what? Pre-incorporation. Now balance will be what?
Post incorporation.
So actual data.
Sir, suppose அது கொடுக்கலனா
Sales ratio. Bad debts are connected with what? Sales, credit sales, so sales ratio. Since it is given, 500 is related to pre-incorporation period, balance 1,000 is for what? Post.
Interest to vendor on purchase consideration up to 1st May 2016. Vendor on purchase consideration.
Adjusted time ratio. Okay. What is incorporation? Sorry, what is the agreement to take over? Maybe leave about 3-4 lines gap and take this working. Agreement to take over the business was signed on 1/11/2015. Incorporation was done on
1st March 2016.
interest was paid up to
1st May 2016.
interest was not paid till the end of the year. Interest to vendors was paid up to 1/5/2016. Now pre-incorporation எவ்வளவு months covered?
4 sir. 4 sir.
Pre-incorporation 4 months. இல்லை post-incorporation
2 months.
2 months.
2 sir.
So adjusted time ratio, that is
2 sir.
2:1. Clear? Interest was paid only up to what date? 1/5/2016. So pre-incorporation 4 months. Post-incorporation how many months? 2 months.
Sir, sir. Amount
Done? Okay. Tell me the rent amount total
9,000.
9,000 and the ratio let's split பண்ணுங்க. This into 1/3.
3,000, 6,000 sir.
Then வேற என்ன இருக்கு? Salaries
salaries. $5,000, $10,000.
Directors fees post incorporation.
4,000.
Fully charged for post incorporation.
Interest on debenture post. 5,000. sir. Audit fees 500,000.
Discount on sales. Sales ratio. Depreciation.
8,600.
Advertisement.
6,000. 1,000.
Printing and stationery.
Thousand to 1,200.
General expenses.
1,600.
Commission on sales.
$2,000.
Commission on sales. Sales ratio. Bad debts actual numbers. Adjusted time ratio for interest to vendors.
The bad debts வந்து அதை கொடுக்க அந்த estimate கொடுக்கலன்னா sales போடணும்.
Interest to vendors 4 months, 2 months. Adjusted time ratio. And after this, you must write the two sentences. In a sentence, pre-incorporation period profit. What is the pre-incorporation period profit? 41,700. Transferred to capital reserve. To be transferred to capital reserve, not available for dividend. Post-incorporation profit available for dividend. Distribution how much? 38,500. Pre-incorporation profit is a capital profit to be transferred to capital reserve. You must write. You should write. It is not available for which one? Dividend or managerial remuneration. Post-incorporation profit is available for what? Dividend or managerial remuneration. Any doubt in this working?
No, sir. இதுக்கு ஏதாவது ஃபைனல் அக்கௌண்ட்ஸ் மாதிரி இதுக்கு மேல அவ்வளவுதான் sir.
Okay. Directors' fees and interest on debentures post incorporation. Bad debt actual data is available. Interest to vendors, we adjust the time to 6 months. That is 4 months pre, 2 months post. What will you write? Pre-incorporation profit to be transferred to capital reserve 41,700. Not available for dividend or remuneration. Post-incorporation profit available for dividend and remuneration how much? 38,500. Come to question number 2. Question number 2 பாருங்க. The partners of which one? Nagaraj agencies decided to convert the partnership into a private limited company. Okay. This question number 2 and question number 3 are for your homework. Question number 2 and question number 3 are for your homework. Try to work out. Wait, let me to check the answer and give it to you. Three times. Spelling mistake. Triple. Okay. So if you look at the question answer, pre-incorporation loss will come. Pre-incorporation loss will come. Question number 2 or the pre-incorporation loss will come. Post-incorporation profit இருக்கும். Please note this and try பண்ணு. You are going to try it at home. Pre-incorporation there will be a loss. Post-incorporation there will be a profit. Try பண்ணு. இப்போ இல்ல வீட்ல. Question number 2. Question number 2. What is the answer? Pre-incorporation loss 19,000. Post-incorporation profit varum. Question number 3. Question number 3. Please note. Both pre-incorporation. Okay. Pre-incorporation profit. What is the pre-incorporation profit? 3887. Post-incorporation la profit. Okay, try these 2 questions at home. Try these 2 questions at home. Question number 2 and 3, try it at home. Take up this final answers. Let us see.